All right, let's just jump right in. We're watching the very idea of a bank get completely flipped on its head. I mean, it's no longer just about those big brick and mortar buildings you see on the corner. Nope. Today, it's all about platforms, it's about protocols, and it's about the code that's running on your phone. And this massive shift, it's kicking off one of the biggest debates in the heart of finance. And this right here, this shows you exactly what I'm talking about. For literally centuries, banking meant you had to physically walk into a building, right? With tellers and vaults, the whole 9 yards. But today, for so many of us, our bank is right here, in our pocket, on a smartphone. We're using crypto wallets and payment apps that are just built into everything we do. Finance has gone from a place you go to just a thing you do. So that brings us to the real heart of the matter. As all this new technology just rockets past the old rulebook, who gets to decide what a bank even is anymore? And more importantly, who gets permission to actually be one? Well, this puts the main gatekeeper of the US banking system in a seriously tough spot. They're stuck trying to figure out how to encourage all this cool new innovation while also, protecting the entire financial system from some new, crazy, unforeseen risk. Okay, so the key to this whole puzzle is something called a bank charter. The best way to think about it is like the ultimate driver's license for money. It's the official government permission slip that says, yep, you're a bank. It's what gets you access to the core financial plumbing. We're talking the payment system, federal deposit insurance, all the big stuff. Without one of these, you're basically stuck on the outside looking in. And the folks in charge of handing out these national charters, that would be the Office of the Comptroller of the Currency, or the OCC for short. They're the ones on the front lines, trying to make these century-old banking laws fit with brand new tech like fintech and crypto. Not an easy job. And look, they've been trying to figure this out. They've floated a few different ideas. They've talked about creating these special sort of limited purpose charters just for fintech companies. They've put out official letters giving the big banks a green light to hold crypto for their clients. They've even given some conditional approvals to new digital-only banks. But, and this is a big but, every single one of these moves has sparked a huge debate. And in some cases, even lawsuits. So let's get into the specifics. Where has this whole debate actually boiled over into real-world fights? Because these aren't just theoretical arguments in some stuffy boardroom. These are actual battles being fought over the future of your money. You can really see how this has ramped up over the last few years. It all started with this big idea for a fintech charter, which was argued about for years. Then boom, crypto custody gets the official nod, opening up a whole new can of worms. And that brings us to today, where it's just this constant tug of war between the federal regulators and state authorities over who really calls the shots. Okay, so let's dig into these conflicts because this is where the rubber really meets the road. Take that battle over a national fintech charter. State regulators literally sued the federal government to block it. Why? Well, they're worried that one national charter would let these new companies just sidestep all the tough state-level rules, the ones about lending rates and data privacy that are there to protect consumers. Then, on the complete other end of the spectrum, you get the approval of Anchorage Digital Bank. This was massive. It was the first time the feds gave a full-on banking charter to a company born out of the crypto world. So yeah, these aren't small disagreements. They are major flashpoints, and each one is making the line of what a bank is just a little bit blurrier. And really, all of this, it all boils down to one fundamental philosophical argument that's always been at the heart of financial regulation. It's that classic tension, right? The push to move forward versus the need to make sure the whole system doesn't just break. So on one side, you have the innovators. They're arguing that, hey, we absolutely need these new modern charters. It gives companies a clear set of rules and brings them inside the system where they can be properly supervised. But in the other corner, you have the critics. And they're worried about something called regulatory arbitrage. Basically, they're afraid the companies will just shop around for the easiest, most lenient regulator they can find, creating a race to the bottom on safety, and maybe, just maybe, creating new risks that could endanger the entire economy. So you might be thinking, okay, this is all interesting, but why should I care? Well, here's why. This high-level regulatory fight is directly shaping the financial tools you use or are going to be using every single day. I mean, really think about it for a second. Should the app you use to send $20 to a friend be regulated with the same intensity as a giant global bank? Should a company that does nothing but hold onto your crypto have to meet the same tough requirements as a bank that's giving out mortgages? These aren't easy questions, and they're exactly what regulators are losing sleep over. And that's why this quote just hits the nail on the head. This isn't just about tweaking a few obscure rules. No way. This is about fundamentally deciding what we want our financial system to look like, who we're willing to trust with our money, and what level of risk we're okay with in the name of progress and innovation. So here's the bottom line. Nothing here is set in stone. Not even close. This whole digital charter debate is happening in real time, and how it all shakes out is going to define the next chapter for banking. The rules for the money in your digital wallet are literally being written as we speak. The only question is, who's going to be holding the pen?